All right, ladies and gentlemen, welcome back to TLDR Finance. And today we're going to talk a little bit about Bitcoin because why not? It's one of the hottest news topics right now, just making new highs. And I made actually a video similar to this years and years ago in my first attempt at doing YouTube. And it's amazing how in just a few short years things drastically change and also how some things stay the same. So we're going to get into a little bit of just why this recent rally in Bitcoin is a bit different, a quick touch on what it is exactly, and then of course a whole lot of details in that if you'd like to stick around. So welcome to TLDR. So if you've been under a rock, Bitcoin is a digital currency that started off years and years ago, back in 2008, 2009, from a supposed individual or group of individuals known as Satoshi Nakamoto. We'll double check that here in a slide or two, but created this to get away from banks and government control and ultimately create a decentralized, totally public form of currency. Now, we're not going to get into whether or not it is a currency or not because technically it's not yet. It's still too volatile for what it is, but it is definitely an investment and becoming so in a big way. So back in 2017, it made huge headlines by rocketing up from a few thousand, few $100s to up to 19,000, 19,500 before crashing back down at the start of 2018. So why is this different? What's this time? What makes this particular rally different? Why did it just crush 19,500 level, smash through 20K, smash through 30K, now getting close to 35K? For it. And here's a list, of course, for my TLDR readers. We're just under a minute here. If you want to read these are some great tidbits of what I found over about 10 or 15 different articles in the last couple of days that I've read through. A lot of repetition, and probably the biggest thing is right here, these institutional players. Big names have come in, which means big money. PayPal, Square, JP Morgan, Mass Mutual, Guggenheim, Goldman Sachs, Microsystems, which we're going to talk about later, that have invested not millions with an M, but hundreds of millions and sometimes billions of dollars into the currency itself or into Bitcoin, whatever you want to call it. There are a couple of all these other things add to the rocket or trajectory of the stock or investment lately, and we'll talk more about those here in a minute. FOMO is probably another good one. Everyone's, oh, what's this thing that went from a couple thousand, 3,500 earlier this year, to 3,500 was probably 2019, but a couple $1,000s to now over 30, 34,000 right now as we're talking. Shorts being forced, so some technical indicators coming into play here. A lot of people were short at the 20,000 level that finally admitted defeat and covered recently when it broke 30,000. That spurs buying because they have to buy back their short position, plus all the people that were buying just because it went higher. Um, Mainstream pieces being held by the CME, the Chicago Board of Exchange, and the Chicago Mercantile Exchange, creating futures. GBTC creating the first investment fund ETF for investing in Bitcoin. So the accessibility has become a lot more, and that's what makes it a lot different. And if you look at the chart for the year leading up to the high back in 2017 versus the chart looking into the high of today, it's still volatile. There's still some volatility for sure, but it's less so, which means it's the investment is maturing. Things are becoming more solid as far as infrastructure, and accessibility helps with all that. You've got the investment firms now getting into it because they have the ability to do these larger transactions. And yeah, so getting into it a bit more. Celebrities, I know it's probably the least piece of it, but they are bringing notoriety and eyeballs to it, right? Akon wanting what was the article read? It was a cryptocurrency city of the future, and it all based off cryptocurrency. But him talking about his passion for that. The girl from Game of Thrones, Maisie Williams, Maisie Williams, talking about her love for it. Should she invest in it? Getting her Twitter following involved, which is over a couple million people. Paris Hilton talking about her love for it. Then of course you got the better names in my opinion. You got Bill Gates, behind it, investing in it. I saw Donald Glover had a comment about it and getting into it. Microsystems CEO invested $1 billion plus into it. He's now trying to convince Elon Musk to move a bunch of Tesla stuff in there. So just the weight of the names nowadays are just so much bigger than the come on, help me out, the Facebook brothers, the Von Hittens, Von. Anyway, we'll come back to that. But the twins from the Facebook stories and that started. I mean, they, yes, of course, they had some notoriety because of the movie and that, but they're not Bill Gates. They're not Elon Musk. They're not Sawyer, who's the CEO of Microsystems. And because of that, obviously, it's in the news more. The retail sector is getting more involved. Clients are asking their advisors more for it. John Smith at the local bar, what have you, is talking about it, pulling it up on his phone, going to Coinbase or wherever he wants to go. PayPal, like he said, Square, all these cash apps now have access to buying Bitcoin. Robinhood, for example. So you can go, and it's just so much more accessible to just quick, okay, yep, that sounds like a good investment. Like buying an Apple share, buying a Google share. So, um, yeah, because of all these big names talking about it, bringing it up, it's in the news. It's obviously more talked about, therefore, um, more curiosity is sparked by the general public. Larger sums of investments, we already talked about this, hundreds of millions and sometimes billions of dollars, much different than the 2017. Supply and demand, we're gonna got a quick little graph here coming up for you on that. But ultimately, Bitcoin has a limited supply, 21 million coins. That's it. That's how it was created initially. And so because there is limited supply, and right now we're at about, I think it's 18 million and a half or so already out, so there's not much left to continually be discovered through Bitcoin mining, is what it's called. So supply is short. Supply is limited in the sense that now, if we only have that many coins, something has to give, and therefore demand, so or price, because demand is skyrocketing. So inflation scares. So a lot of people with the recent government printing these crazy stimulus checks, right? I saw a post the other day that we didn't have $5 billion for the wall years ago, but now all of a sudden we have trillions of dollars to help the economy, give hundreds of billions of dollars to foreign aid, stimulus checks, all this, right? Well, where did that come from? And so the worry of inflation has started to really increase, and people, clients, millennials, boomers, whoever alike, are looking for a way to safely, right? Or at least an alternative to protect themselves in case something happens with that. Gold, of course, is notoriously what it has been in the past, how you beat inflation. Um, but a lot of comparison has been made with Bitcoin being the new digital gold, right? The digital form of the old school hard shiny metal sitting in your backyard, in your basement, in your safe, wherever you have it. And that has definitely sparked some of the movement here. FOMO, fear of missing out. People just, oh well, shoot, I looked at it when it was at 5,000. Now it's at 10,000, 20, 30. Shoot, I better go buy some now before I miss out on the entire move. So that's definitely part of it. It actually sort of crashed the Coinbase servers for a couple of days around the end of the year here, because just so many people flooding to go buy some. So a bit on the technical side. So we do, I do talk a bit about trading here. So a lot of people, of course, investors, both retail and institutional, were short Bitcoin right around the 20,000 level. Because of course that was a huge line in the sand from before, from 2017. It didn't break 20,000, so that was a good technical resistance level, that it's gonna should fall or stumble from there. And not to say it didn't a little bit, but when it rockets through in less than a month from 20 to 30, that hurts being a short seller, because you owe then 10,000 per Bitcoin that you had, and some of these players were bigger, 120 million. was the article I read of shorts that were covered. So pretty much 120 million in losses, depending upon how big the stakes were below it. So that hurts, and in order to get out of a short, you have to buy the position back. So that buying, plus the fear of missing out buyers, plus the inflation scare buyers, all this just leads to this huge boom of, I don't know what the percentage is, but from 20,000 to almost 35 in about a month or less. So it's just absolutely crazy growth. Um, we talked about the technical analysis. So technical analysis has pretty just by default, even if the price has never been to a certain point, um, big round numbers are stumbling blocks for price movement of an investment. So 20K was a big one, 30K was supposed to be a big one, and if you look at the chart, there is a bit of a stumble there, but just had the crazy momentum of all the previous pieces helping it explode above. So yeah, another piece, it's a little smaller, but obviously a big piece. This is why institutions are more okay nowadays to get involved than they were before. Is Bitcoin's got a better reputation. Before it was a lot about buying drugs and buying illicit things and illegal activities, um, and it's less so now. The government has cracked down on some of those old black sites that was really using it for that. There hasn't been as many thefts or scandals like the Mt. Gox situation, where about over $500,000 worth of the coins was hacked or stolen. Security's been increased, regulations gone up. We now have anti-money laundering laws. They're still working, I believe, on fine-tuning how to tax cryptocurrencies, but it's at least been talked about. It's not nearly as new as it was back in 2017. All this leads to better reputation, which leads to more people being confident in, hey, I am a Bitcoin investor, rather than like, oh, I'm gambling with Bitcoin. Huge difference, big deal, and that's definitely helped it. It's gone mainstream. So big, they now have futures that trade on it. They now have ETFs that trade on it. The CME, Chicago Mercantile Exchange, and the Chicago Board of Options Exchange, excuse me, they created futures. They created options on futures on these with the underlying Bitcoin. And so that's definitely helped and made things more back to accessibility, made it more liquid, made it easier for these big institutions to get involved with it. Um, and then finally here, less volatility. So still very volatile because you don't go 500% return in less than a month on a particular the dollar bill versus the euro. It does happen usually at a huge event, but less volatile in the sense of less than it has been over the last couple years, definitely in 2017. So the curve is smoothing, but there's a lot of talk, and I'll show you a slide here of some of the price targets that they're saying, and these aren't just random crypto nut from the internet archives or the mom's basement that we had from 2017 and unknown names and that sort of thing. We have Guggenheim, we have Citibank, we have Square, Seeking Alpha is giving their price targets, big names, big analysts, well paid, well funded, well researched, and they're giving their numbers of what this next rally could be, which is kind of mind blowing for sure. So a couple of quotes I wanted to just show that I found in the research I thought were pretty good. We talked, so what is Bitcoin? Digital currency. So all the sources are in the description down below if you want to read more into where I got this information or just read the full articles. They were pretty great. Definitely a rabbit hole, so be careful. Don't do this right before you gotta run somewhere for 20, 30 minutes. Give yourself an hour, if not five, and just enjoy the ride. It's same thing happened to me 3 years ago when I was doing some research on Bitcoin and Ethereum. I thought it was just gonna take me 2, 3 hours. About a week later, I was finally just had to stop myself because it's just fascinating how all this stuff came to be. So digital currency, decentralized, created by Satoshi Nakamoto. Um, and it's ideally was to promise lower transaction fees, complete transparency, the ledger that tracks it all, that normally what a bank would do, where they keep track of your accounts, they keep track of transactions. With Bitcoin, it's all public. It's an online ledger that anyone can see. Of course, it's encrypted, and it uses Bitcoin miners and large computers, very powerful computers, to crunch all the numbers and that and keep everything there. And each person that transacts it builds on itself. So in order for me to send money to someone else, I have to um, verify the stuff before me, and so because of that is how it kind of works. A lot more on the source here, source one, which I believe is this Investopedia, has a great article, goes really in depth. Well, bit of a flyover because it is a much deeper read to know exactly what Bitcoin is about, but still great for sure. Um, no physical. So the big thing of Bitcoin is it's all about what we give it as far as how much we believe as the people, as the owners of Bitcoin in its value. Which, it's $685 billion market cap right now. There's a lot of people with some doubts about government maintaining, central banks, Federal Reserve. And so, but at the same time, some might argue similar to the dollar, right? The dollar isn't worth anything except for what we've given it, and it's the currency of the world, so it does help that. Bitcoin doesn't have that, but Bitcoin does obviously have a lot of people that are incredibly passionate about finding a solution than what's currently going on. Supply and demand. So on the left, we've got a basic supply and demand curve, right? If supply was not limited, right, we have this supply increasing, which is typical. As prices go up, more suppliers are going to come in, more gold or trees are going to be cut for more wood. However, with Bitcoin, there's no more supply. We can't just go out and make more. So that's what this graph is here on the right. It's a static line, 21 million. So I wanted to show this great illustration because in a typical piece, we've got a smaller price move, right? P1 is where we're currently at. If demand increases, supply is going to increase, we're going to get, let's say, a 1x move, right? Whatever this move is. If P is currently 1,000, P might be 1,200, 1,500 even, okay? However, with Bitcoin, you'll notice this gap is bigger because supply is limited. So price has gone up, demand has skyrocketed, price has gone with it. Easily a 2, 3x space here compared to the one on the left, right? So instead of 1,000 here at P, this might be 3,000, 5,000, 10,000, whatever it is. And as you can see with Bitcoin, I mean, the prices move quickly, right? We were at less than 10,000 just a few months ago, and now we're at pushing 35. So absolutely crazy, but this does show you how part of that price rocketing occurs is because supply is limited. So we can't make any more, so you just have to go out if you want it. You got to pay whatever the going rate is, and sometimes even more to get it. Oh, institutional players. I talked about this earlier. Just some quotes here showing the actual people. So Buffett, as far as we know, is still not involved in it. But we've got Skybridge Capital, $182 million in December. Just absolutely like ton of money. Mass Mutual, an insurance company. Insurance companies are typically hugely risk averse. They don't want any part of risky assets, volatility. Ugh. Yet Mass Mutual spent $100 million to diversify some of their assets. Guggenheim is just given the green light to do up to 10% of its $5 million fund, or $500 million. Like, Fidelity and Japan's Nomura Holdings are now safeguarding Bitcoins and other cryptocurrency for its institutional investors. So it's just helping. It's just, again, accessibility, and they're getting in the game. They don't necessarily want to be in the game, Fidelity and Nomura, but their clients are. So they have to be ready to hold them, to safeguard them, to make sure the security is good for their wallets and that. So absolutely, game changing. I need to quit doing that. Emergence of the kind of infrastructure. So a piece on just accessibility in that. So we already talked about that. And then more big names: Paul Tudor Jones, Harvard, Square, gobbling up Bitcoin balance sheets, PayPal. I mean, Robinhood, all this stuff. Holders, which is an affectionate name for Bitcoiners. Hold on, don't lift, or don't sell, was a coined phrase back in 2017 and 18, because obviously Bitcoin cratered. All the fanatics really said, no, 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 it's just a temporary setback. It'll come back. Don't worry. Hold on. And so that's where holders came from. They're helping fear the kind of or the parts of the people for catalysts for inflation. So with they're worried about all the printing of money that we're doing frivolously right now with the stimulus packages and so they like the thought of Bitcoin as a replacement or a hedge against the inflation. According to Seeking Alpha, so the recent downturn was considered a long-term double bottom in Bitcoin during a crucial transformation phase. So if you look at the chart, there's going to be two dips, and that is a classic technical analysis pattern for an potential upward movement, which of course it's not so potential anymore because we are moving upward. Yeah, a lot more good stuff from Seeking Alpha in that source about the future and where they kind of see it going. Price targets. So here, down here, this source 11 is the continued part of that article. Due to the next significant top based on their analysis, $75,000 to $270,000 price target for Bitcoin by 2022 to 25. Citigroup saying 300,000 near-term price target. They didn't say in the article what near-term was, but a few years, I would think near-term is less than that. But even still, a few years, 300,000, absolutely incredible. And then of course Guggenheim Investments up top for $400,000 price target. So just some crazy numbers that, again, you'll see these numbers mentioned in 2017, but the difference is it's not Guggenheim Investments, it's not Bloomberg, it's not Seeking Alpha or Citibank. It's John from Joe's basement, or and maybe that, maybe that's obviously a bit of a shot, so don't shoot me, but they just didn't have the pedigree. They might have been a doctorate, they might have been some crazy research analyst for it, but they didn't have the pedigree of these giant names and companies behind them. So yeah, and then lastly, this MicroStrategy. Absolutely amazed, but this company, and I did this on purpose, it's a company that provides business intelligence, mobile software, and cloud-based services. Market cap is $3.6 billion. The CEO is an absolute Bitcoin fanatic. So much so that in this article, MicroStrategies purchased another 30,000 with some debt they raised, bringing their total to 70,000, over 70,000 Bitcoins, or worth more than 1.6 billion at the time. That number is now over 2.3 billion just in Bitcoin. That's over 2/3 of their company's value in a Bitcoin. They're not even in that industry. So, what in the hell's going on? I don't know. But long and the short is, Bitcoin's going up because the money is finally here. The infrastructure is finally here. And now, will there be a bit of a step back before we hit, if we hit these 100,000 numbers? Who knows? But at the same time, it is an absolute blast to read about it, to follow the Bitcoin story. And by all means, love to hear your comments and that, and love to do another video like this in another year or three. At that it's worth nothing or that it's worth a bunch. Either way, absolutely a blast to read about this, and love your comments, and appreciate the follow and the like, and have a great day, guys.